It's about that time of day again. My name is Joseph. Monday evening, September 17th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with oil, crude oil is range bound with a big triangle pattern tonight. So my plan is to buy the low, sell the high, and avoid that middle while focusing on failures tomorrow morning. The S&P is bearish and sitting in a range as well, and we're watching that range expansion levels just overhead for some nice selling opportunities tomorrow morning. Nasdaq is bearish with a spike in channel pattern tonight, so looking for selling opportunities using buyer failures up near the highs. Gold is range bound, and with that 1200 round number back at the low of that range, that's my target for selling opportunities on Tuesday. And wrapping up tonight on the euro is bullish with a spike in range, so looking for buying opportunities using the 2-try rule below the range tomorrow morning. We're back in the action here once again after a storm-filled weekend. Hope everyone made it out of the storm on the East Coast nice and safe and sound. Hope you guys are drying out from that storm. We got quadruple witching later on this week, the third Friday of every 3 months. We'll talk about that in a second. And that tells us we know we're going to have a lot more volatility. We're going to get some big fireworks this week and most likely a good chunk of profitable trading opportunities coming our way. So as always, I got a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for Tuesday's session. But before we jump into charts and put the plan together, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out right here on my blog at Sideways Markets. I'll leave the link in the description of this video. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. If you like what you see, please help support this channel by subscribing. And when you subscribe to our channel, make sure you hit the bell icon so you get notified every time I post something new. And if you really want to stay in tune with everything we do here at SOT, to make sure you never miss another video, another psychology video, anything we do here, make sure you head over to sidewaysmarkets.com. I'll put all the links in the description of the YouTube video. And while you're here, join our mailing list. In the upper left-hand corner, all I need is your name and your email address, and I'll shoot you an email anytime I publish something new. If you're hanging out on social media, Stock Twitch, Twitter, Facebook, LinkedIn, I'm posting stuff throughout the week that you won't find anywhere else on any of my other channels. So pick whatever your favorite flavor is and follow me in the lower left-hand corner. And how nice is this, right? All the charts from tonight's video. You can have all the charts that I work hard on every day to give to you guys. You can have those charts on your own computer and ready to go for tomorrow. So if you don't plan on joining me in the trade room tomorrow morning and you'd like to get the big benefit of having all of my charts, right, grab those charts, Rebel video tonight on sidewaysmarkets.com. And then upper right-hand corner, if you're not a member here at School of Trade and you'd like to come out and join the trade room as a guest, learn the basics of the strategy, see what it's like to be a member of our trade room, I got a free pass for all you non-members out there that want to come out and experience it here, right? Grab that free pass in the upper right-hand corner. If you have any questions about anything we covered tonight, don't forget, drop those questions in the comment section below. Pick up the phone and call me in the office. We have a toll-free number on the homepage of the website, or use that live support tool on the right-hand side of our website if you have any questions. All right? It is great to be back with you guys and gals. Like I said, I hope everybody, I know it was a pretty painful storm over the weekend. Hope you guys are starting to get back to kind of normal again. I know that's going to be tough, but my heart and prayers go out to everybody who's affected by that, especially all those poor people who couldn't get their animals out. Oh my goodness, so sad to watch the news headlines here today about this storm over the weekend. So again, I'm thinking about you guys. I'm pulling for you. Keep up the, keep your head up, right? Stay positive. Good things will happen. And then for the rest of us out here, right, everyone else not being affected by this storm, we've got some stuff to talk about here this week because we're going into the quadruple witching week. Now, quad witching week definitely has its ups and downs. Literally, quad witching week is known for its volatility because this is where all four asset classes expire, right? These are the asset classes, both stocks and futures, right? Will both expire the third Friday of every 3 months, right? So March, April, May, June, right? July, August, September, and then of course December being the last one, right? So we're in the month of September. This is the third Friday of the month. That means the 21st is quadruple witching. Now it's really just a self-fulfilling prophecy that really does all of this. People know they're going to get some increased volatility. It can be a little bit erratic, but I find though that in most quad witching weeks, as long as you stay patient and as long as you know that it's going to be a little bit jumpy this week, again, because of those options expiring, futures contracts expiring, because we have so many things expiring this week, right? Again, futures contracts and options on futures are all expiring same time, right? This Friday, end of the day on Friday. So there's going to be some chaos, there's going to be some volatility, but if you keep your head on straight, there'll be some nice, big, tradable opportunities. So as we get closer to the end of this week, it's going to start kicking up here, right? We'll start seeing that volatility kick up, and I'm really excited about a big week we're going to have in the trade room with all of our members. Now tomorrow we get Tuesday, September the 18th. No major news on the calendar tomorrow, so a big wide open space for us to kick some butt together in the trade room tomorrow morning. So don't forget, we open up our trade room every morning at 8 a.m. Eastern time. We trade all the way through the London closing bell at 11:30. We have ongoing training every day. You can learn more on our website at schooloftrade.com. So quad witching, all four asset classes expiring, options and futures, right, expiring this Friday. It means a lot more volatility, a little bit less consistency, but some explosive opportunities are what we're expecting on this third Friday of every 3 months. And again, it's not just September, it's March, it's June, right? It's September and it's December. But typically this is the one. This one and December are usually going to be the big ones, right, of the year. So very excited for that coming up here this week. We'll talk about the news. We got some news later on this week here, but that's the main focus here for tomorrow. We got a wide open schedule for tomorrow. I'm sure we'll be hearing some more headlines that are not scheduled, so we'll keep an eye on that tomorrow in our trade room. And again, all eyes on that quad witching as volatility kicks up into the end of this week. All right, let's jump into our charts here. Got a lot to cover here tonight. I want to make sure you guys are locked and loaded. Don't forget, we're going to trade this every morning in our trade room. But if you're not with me in the trade room, I want to make sure I give you guys a great plan of attack or something to consider for your own trading tomorrow morning. How about some crude oil? First of all, we're going to go crude, S&P, Nasdaq, gold, and we'll wrap tonight on the euro. Crude is range bound with a triangle, a hidden channel, and a measured move on the chart this evening. The lower highs and the higher lows right now are really a telltale sign this market is balanced, right? It's sideways, it's range bound. You could also say this was the original range and we're just seeing a one try, two try failure, right, up above the high of that range. So whether you want to call this a range, like I have it defined here, or whether you want to call it a triangle, you can see these things will come off these highs, off these lows. So it's pretty nasty as far as consolidating, right, as we get narrower. So we're definitely range bound. We're balanced. I don't think there's much of a bear bias. There's definitely a bear bias in the short term, but you can see there's just as much of a bull bias in the longer term. So I think you're going to be able to get this on both sides of it. If I had to choose, I would say choose to err on the side of the bears. You can see that's the most recent, right, move down. So move down into that trading range. Give that little bit of an edge to the bears, but I think you'll be just fine as far as both sides of the market. And so a range-bound market tells us to focus on failures, right? Buy the low, sell the high, and avoid the middle, right? Sell the high, buy the low, and avoid that middle, because you can see that's where it's going to get, right, the sloppiest right now. And of course, anytime I want to buy low or sell high, I always like to find as many support and resistance levels that I can find, right, to give me more precise entry locations. So for example, as we go lower, one leg, Two leg, that's a measured move at 68.46, right below the low of that range. That will be added support. And then one of the things I always like to do is grab this overhead trend line, bring that down as well, and that creates kind of a hidden channel there as well. So in all reality, this whole area down here, right, this whole area down here really could be seen, right, as that big buy zone. So looking for buys off the lows, looking for sells off the highs. You know, it's also important to remember tomorrow is the 18th of the month. I should have mentioned this earlier, right? Tomorrow is potentially rollover on crude oil because we usually see contract rollover around the 18th of the month. So we're watching the volume roll from that 10.18 to the 11.18 contract. So just to give you an idea here on oil, here is the 10.18 and the 11.18. Okay, and all you're looking at right now is which one has the most amount of volume. Remember, oil is a little bit different because oil rolls over every 1 month, and it's usually around the 18th of the month. Sometimes it's earlier, sometimes it's later, but you can pretty much set your watch in the fact that around the 18th of the month, you're going to start seeing something like this, where we start losing volume on the current front month, and we start gaining volume on the next front month. So right now, you can easily see that we're still on that 10.18 contract. That still has the most amount of volume. It's almost double the 11.18 contract. So tomorrow, we're probably going to be trading that 10.18 contract. But don't be surprised tomorrow, though, if these two numbers are almost the same. You know what I mean? They could literally be, 300 and 300,000. Okay, it's one of the downsides of oil with the monthly rollover is that it does share volume. You'll notice in other markets when it rolls over, it'll go for all the volume will go from one contract to the next one all at once. On oil, it tends to blend over. So tomorrow, I'm expecting to be trading the 10.18. Once we see that 11.18 contract, once the 11.18 contract has more total volume than that 10.18 contract, we're making the switch and trading the 11.18 contract. Now, of course, we'll do this tomorrow in our trade room, but if you're on your own tomorrow, right, just remember, once that 11.18 contract has more than 10.18 contract, that's going to be your signal to go make the move. If you mess it all up, you really can't mess it up too bad because your broker's not going to get upset at you if you still trade the 10.18 contract because the 10.18 contract won't expire right until the end of the month. This is just rollover. So don't get too stressed out about it, right? If you're not with me tomorrow, I'll walk you through tomorrow in the trade room. But the reality is don't get too stressed out about it because even if you do happen to trade the 10 when you should be trading the 11 contract, it's not the end of the world. Your broker will help get you through that, right? Not a huge deal. So we are watching for possible rollover tomorrow. This is the 10.18 contract. We should be in the 10.18 contract tomorrow from what it looks like in the volume here tonight. So what's my plan here now? I want to buy low. I want to sell high. I want to avoid that middle. So we know right away, right, we're staying away from this middle here. Stay away from that middle. And what I'm looking for is ultimately what we saw here and what we saw here. I want to see the 2-try rule, right? Whenever I think range, whenever I see range, I'm thinking 2-try. So let's think about this for a second. Here's my range, right? Here's my range. And ultimately what we're looking for here is assume we're balanced and assume we can buy and we can sell. We just want to stay away from the middle, right? Let's do a sell first. A 2-try rule, okay? There are two types of 2-try rules. One is going to be a 1-try, 2-try with a lower low back in. The other will be a 1-try, 2-try with a higher low back in. Now, there are good and bad to both of these scenarios. They will both work, but it takes a little bit more confirmation. I'm going to tell you more about that confirmation on that 2-try rule in just a second. But these are the two basic formulas for the 2-try rule, right? It's 1-try, 2-try. That is 1-try, 2-try. And you'll notice some of these will have a lower low, right? And then others will have 1-try, 2-try with a higher low, right? Now, with the lower low, this is always the ideal scenario. But you have to watch out for that second leg really jumping off of that moving average, which means in most situations, the higher low scenario is going to be much easier, right? Be much easier to take that trade long because you're seeing that higher low. Again, I'm going to give you guys some rules tomorrow in the trade room, and we'll know how to qualify, right, the difference between the two try rule, right? One with a lower low and one with a higher low. Again, the one that really is most appealing is the lower low because it traps in those breakout sellers, right? However, there are some specific rules we'll go over tomorrow morning to make sure that lower low doesn't turn into an actual breakout, right? Because you want to make sure it's not too strong of that lower low. So that's the two try rule off the low of that range. Now, if we go back to the opposite side here, it's ultimately the same thing, right? We've got that trading range, one try, two try, back down in, or one try, two try, right? Again, slight differences here between, right, the higher highs or the lower lows or the lower highs, but the most important thing is the buyers are trying twice, right? They're trying once, they're trying twice, and then again, assuming that second try doesn't give too much confirmation here, right? Assuming it doesn't break and run higher here, we'll look for that sell back down in. Again, the much easier one is that lower high because it won't have, right? It won't have that potential breakout on your hands, but it requires one more step to confirm, right? And we'll go over that tomorrow in our trade room. So that's the key, right? Is once we see a range, we're looking for that two try rule, right? I want that one try, two try, back down, or one try, two try, back up. And again, you'll notice a lot of them will look just like this. We'll go up, one, right? We'll pull back, lower high there, right? And back down we go, right? Pull one, two, back up we go from there. And again, I'll go into more details on qualifying the two try rule tomorrow morning with all of our clients. What does a breakout look like? What does a breakout from a range look like, right? Is it a strong break higher? No, it's not, because if all it took was a strong break higher, well, that would have been a breakout right there. So that's definitely not a breakout, you can see. How do we qualify a breakout? Well, we have a little saying, right? The 1, 2, 3 breakout, right? We also kind of stole this from the 1, 2, 3 reversal, right? Kind of an ongoing joke here every night on this newsletter. But the bottom line, though, is that 1, 2, 3 breakout. What does it look like? Well, it starts off with number 1 is a strong move higher. Number 2 is a pullback to the moving average. Now remember, at this point now, sellers are looking for that sell back down, right? That failure back down. Once those buyers fail, right? We'll go up, buyers try to buy the pullback. We'll then look for those stops to get run, and that's the two try rule, right? That's the 1, 2 failure back down in. Well, if they can hold that pullback, 1, 2, and now we see hold, right? Explosiveness. That's why I said when you're watching your two try rules, if the market just jumps off of this moving average, if I can draw the moving average a little bit tighter there we go, right? If we jump off of that moving average, now that two try rule is confirming we have a 1, 2, 3 breakout. Once we have that 1, 2, 3 breakout, then I'm not going to chase after it. What I'll do is I'm going to do two things. One, I'm going to find a new channel by drawing off the high, right? 2, I'm going to draw a trend line off of that high, off those lows, right? And that creates this little tiny support zone right there. Sometimes it's bigger than other times, but that then becomes, combine that now with the high of that range, that becomes where I'm looking to buy now, right, as we go higher. All right, guys, so a quick recap here. It's range bound. I'm looking for that 1 try, 2 try, back down in, 1 try, 2 try, back up in. Stay away from that middle. If we do get the breakout, 1, 2, 3, find that new channel, draw off that high, right? Draw that trend line down, look for that sell off the top of that channel if we get that strong enough breakdown with that 1, 2, 3 reversal. So two try rules, 1, 2, 3 breakouts. You want to learn more? You want to see more examples of these patterns? I hope you do, because I can't give away everything on this newsletter every evening, or else we'll be here all night. I want to give you a lot more examples of two try rules, a lot more examples of what a 1, 2, 3 breakout looks like, and they're all part of a free trading class that I have linked up in the upper right-hand corner. I'll also link it up in the description description of this video. So I would recommend, if you're here for the first time today, or maybe you're not here for the first time today, but you want to see hundreds of examples of what these patterns really look like, grab that free class. It's linked up in the description. It's in the upper right-hand corner. And that way you'll know what these two tries really look like. All I can do right now is basically give you examples of what's happened before, but I want to show you kind of how the best way is to trade those two tries. And I guarantee you'll find some ways to improve your own trading, even without being a client of mine in our trade room. All right, let's keep going. So oil is looking good here, guys. Let's keep rolling though, because now we go from a range-bound market now to some trending markets. The S&P is bearish with a channel, resistance trend line, measured move, and of course a trading range on the chart this evening. The channel tells us, we get this bear channel here, right? I'm connecting these two lows up to those highs. What does that bear channel tell us? The bear channel tells us the momentum is bearish. We should focus on selling at resistance, right? The channel tells us to sell at the high of that channel, right? Resistance levels are key. Let's draw a trend line off these highs. So just like I mentioned before on that 1, 2, 3 reversal, I'm going to draw this channel down. That creates that channel. Take out that trend line, and that creates that resistance area overhead. So we know the market's bearish. We know we want to sell at resistance. Where's the place to find resistance? Up at the high of a channel, right? Use that resistance trend line there. Now, where else can we use, right? What else can we do to find resistance? We have a trading range down here. Anytime we have a bear market that shows a double bottom, yep, that's a double bottom there, guys. Again, if you watch my nightly newsletter, you already know anytime we see a trending market stop making lower lows and double bottom, that tells us double bottom, that tells me now we have a range. Well, I want to sell high, right? I want to sell high using anytime I have a range, 1 try, 2 try, and back down in, right? Well, wouldn't it be nice if we had some level of resistance up here to use? Absolutely it would. So why don't we take the size of that range, let's copy and paste it, and let's put it up above. We call these range expansion levels, right? That range expansion level. So look what I've done. I've taken this double bottom, marked up the range, copied and pasted it, and put it up as a range expansion. Now you could go as far as to say that range expansion just below 2,900 is right below a big round number. It looks like there could also be a bit of a reversal line there, right? What was support now could be used as resistance. So I really like this area. We're bearish. We want to sell at resistance. We get the top of that channel, the resistance trend line, and we have that range expansion level, which is great because this measured move at 93.5, 1 leg, 2 leg, this measured move is a little bit too much support for me to be confident try selling here right now. So we're staying patient for price to push higher so we can sell it back down to those lows again tomorrow. Now remember, anytime we see a trading range, what are we thinking here? We're thinking failures. We know we're bearish, so we're looking for those buyers to fail. And again, keep your eyes on this area up top here. I'm looking for price to go up. I want to see those buyers try to buy the pullback. Once they try to buy that pullback, right? And again, it looks something like this, right? Something like this. You can see those right there, right? We go up. Buyers buy the pullback. They fail, collapses back down. We go up. Buyers buy the pullback. It fails, collapses back down. I'm not making this 2-try rule up, guys. You can see hundreds of examples of this. And again, right, I've got them all built into my free trading class. In the upper right-hand corner, grab that information icon, and you can literally see this. It's probably a couple hundred in there by now. I've been loading them up there for years inside of my free trading class. So I want to get above the moving average, right? I don't want to sell into that measured move though, right? So this one's a little bit too close for comfort, right? This failure pattern is a little bit too close for comfort in my eyes, right? You can take it, but it's probably not going to be the most reliable pattern, right, we've ever seen. So I'd much rather see us go up, up into that reversal line, up into that big round number, up into that trend line, up into that range expansion area, right? Multiple levels of resistance. Let those buyers now try to have some fun with it. Once they fail, we know where their stops are, right? And we can sell it back down again. Target's pretty easy, right? Target's back down to retest that low. Now, when we go back to retest the low, what's probably going to happen is we're going to probably see one of two scenarios, right? We go up, we fail, we come crashing back down. One of two things is, well, actually one of three things is probably going to happen. One, we're going to bounce and do it again. Simple as that, right? We'll bounce and we'll do it again. So the sellers will go back to retest the low, right? We'll bounce off that low. In other words, nobody's selling low. They take the profit, price bounces, and we do it again, right? Sometimes that bounce off of that low will turn into, you guessed it, a 1, 2, 3 reversal. 1, 2, 3. So if we do see that 1, 2, 3 reversal, and again, right, that reversal has to show us some strength. Again, if it was just as easy as a strong move against the trend, well, we'd all be rich, right? Because it'd be easy to make money, right? If reversals were just strong pullbacks, this would be a whole lot different ball game, wouldn't it? But we all know they're not, right? Reversals are not just strong pullbacks. Reversals have to hold. So we go up, 1 try, 2 try, we bounce off of that low, look for it again, back down again. Or look for that 1, 2, 3 reversal. And again, it will come right off that moving average and you'll see it. What's the plan at that point? Plan is easy. Find that new channel, right? Draw that trend line off of that low. That will kind of create that little support zone there. And we're looking to buy the pullback on the way higher. If this thing reverses, there's a ton of potential here because now you've got that, 29.11, right? All the way up there to retest today's high. That's a big, big target for those buyers if the bulls can take control. Now, second scenario, or let's say first scenario, right, was the bounce and the do it again. Second scenario was the bounce, right, and the reversal, right, new channel. Third scenario, we run through the low of that channel. Now, this is the hard part, okay? You thought the other one was a little tricky. This is even harder because I'll tell you what happens all the time. We see it go lower and it just jumps right back up. What usually happens is it goes lower, it can't hold that pullback and winds up running back higher because the sellers, right, the sellers get smacked around. Nobody wants to sell low. Okay, so be very careful selling low when you have the market in a range. So that's something you really got to be careful tomorrow, and a lot of times that will lead to that 1, 2, 3 reversal. If it doesn't lead to it, 1 try, 2 try, back down again we go. Again, it'll look just like these. Okay, now, what else can we do here? What other option we have here? Another option would be we go up, we go through the low, and now we've got strength. Enough strength to get the moving average below the low of that range. If we can get enough strength to get the price below, again, got to get that moving average below the low of that range. If we can get it, then we're looking for a two-legged pullback. Very, very important here. It's a two-legged pullback, right? I call this a fake out, breakout pullback pattern. It's a very simple pattern, and as a matter of fact, I teach it inside that free trading course, right? Upper right-hand corner, linked up in the description. You can grab that free class and learn more about that pattern and see more examples of it. But the bottom line is we've got to get that strong move through, strong enough to get the moving average below the range, and then 1 try, 2 try for that sell back down. And a lot of times you can combine these patterns with that underbelly, with the top of that channel, right, for that 1, 2, and go. Okay, again, got to be real strong going through that low tomorrow if we're going to be successful trying to sell low. So we get the bears covered, we get the bulls covered, we're ready to go. Tomorrow morning, 8 o'clock Eastern time, we're going to trade that strategy together. Let's keep going. How about some Nasdaq here? Nasdaq is relatively easy. It's bearish with a spike in channel, a trading range, a reversal line, and a measured move on the chart right now. Now, first of all, this big spike down, right? That big spike down gives the momentum to the bears. Then we see that pull back, a lower low in price, starts off with a spike, turns into a spike and channel. Right now, remember, a lot of times we see a strong move down, they double bottom off of that low, and it becomes a range. So this is significant, right? It's significant. That lower low is significant. It tells us that we have a range now, a channel now, not a spike in range. Okay, that tells me momentum is on the side of the bears, and I should focus on selling at resistance. Now, where can I find some levels of resistance? Good question. Up around the high of that channel. I can also use this prior swing, right? Prior levels of support, good example right there. Prior levels of support can be used as resistance. You can see that was a good example from earlier on in today's session. Prior levels of support can be used as resistance, right? So that's a level of resistance. And you know what? It's also worth mentioning too, you have this trading range, right? This will not be the first or the last time, right, that you see that the market use the underbelly of a range as resistance as well, as we pointed out on the S&P chart just a few moments ago. All right? So, if we can get short off resistance tomorrow, where's our target? Targets are back to the lows of the channel. Targets are down at that measured move. Spiking channels always tell me look for that measured move as the final target. And surprise, we're headed right back to that prior week low, right? Last week's low. Big, big, big incentive for those bears to finish off this move. So we know we want to sell at resistance. We know we want to sell at resistance. What are some options here, right, as we go higher, as we go lower, or maybe even as we go sideways here? Now, as you can imagine, if we go back to the high of this channel, there's going to be a lot of confusion. The market will feel bullish. You know, for example, this example back here from earlier on in today's session, we go above the moving average, and look what happens. The buyers clearly now are trying to buy that pullback. Once they fail, the market ends up returning back down to that low. We're looking for something very similar. We go up to the high of that channel. I'm expecting these sellers are going to the buyers will come in, try to buy that pullback. Okay, now we know where their stops are. We can sell into those stops, right, to try failure. Once we see that failure go, again, the failure becomes the first opportunity, then we can go out and find the new channel. Okay, a nice easy trick, draw those trend lines down, up off that high, and we'll look for that sell off the top of that channel as well, right? This will oftentimes combine that red line along with the orange line, and we'll all be happy with lots of levels of resistance, right? It's bearish, we want to sell at resistance. So that's an easy set of patterns we can use if we go back up, right, to retest that high, right? Again, you can see, we saw examples of that earlier on in today's session. Right now, what if we go sideways here right now, right? Think of something like this. Right, we go down, we're going sideways. So strong move down, right? What if we don't do anything, right? What if we go sideways tomorrow early in the session, right? Then what do we do? You know already, right? We talked about this earlier on crude, right? 1, 2, back down, right? Again, pay close attention to the strength of those moves, because if it really jumps off of that 2 try, it's a reversal, right? It's not a failure pattern. So we're watching that 1 try, 2 try, watching that fake out, breakout, pullback down below those lows, right? We're selling that 2 try, right? We're selling that fake out, breakout, pullback, as we mentioned just a moment ago on the S&P. All right, so those are the 2 patterns we look for. If tomorrow morning, if we're looking at sideways range, double tops, double bottoms, right, lifeless personality, we know exactly where we're going to be looking for those trades here. Now, what if price goes lower? What if price goes lower here? Well, what you will quickly learn about spiking channels is that spiking channels oftentimes, it's remarkable how oftentimes we see this, but spiking channels will oftentimes turn into new spiking channels. Again, this is kind of a macro spiking channel, right, into kind of a micro or a minor spiking channel. Spiking channels always tell me, look for traps into failures. Trap high into a 2 try failure, back down we go. Right? Trap high. What are traps? Traps are patterns we look for every day in our trade room above a prior swing. Right? 2 try, of course. 1 try, 2 try. Watch that lower high for great confirmation. Right? And then dumping it back down again with that measured move and that prior week low. What does a reversal look like? You know what a reversal look like, right? Strength. Pull back to the moving average. Remember, if they can't hold it, we're going to dump it back down to that low, right? If they can, blammo, right? Big move higher, find that new channel. Again, find the new channel, draw out the support trend line. That becomes your sweet spot, and you're looking for that buy on the way higher. If we get that buy going higher, We got some big targets waiting up here, up around that 75, 86, 75, 75 area, right, for the bulls here tomorrow. So bear market right now, sell it high, sell it resistance, use that 2-try rule, focus on those failures, and don't forget tomorrow morning, 8 o'clock Eastern time, I look forward to seeing you there with me. Let's keep going. About some gold right now. So this is an interesting chart, right? Gold appears bullish at first glance, but the lack of follow-through on this recent pullback, right? Gold looks pretty bullish at first glance, right? Pretty strong move higher here, but the lack of follow-through, right, on that recent pullback. In other words, where were the buyers on this recent pullback to the moving average? They were nowhere to be found, right? Look what a real bear market looks like. Every time it pulls back, it's sold. Every time it pulls back, it's sold. Pulls back, it's sold, right? We get a strong bull market here. They pull back, and nobody's there to buy it. Okay, so the bulls had a strong run higher. But if you watched price action this morning, you probably noticed there weren't any deep pullbacks. There weren't any decent pullbacks. I mean, look at this, right? It was literally what, like around 7:30 this morning? That was the last time we saw a pullback to the moving average the entire session. That tells me something big. This was not buyers buying. These were sellers buying. This was a short covering rally, meaning that it wasn't the buyers who were buying it higher. It was the sellers getting out of their positions from last Friday's big sell-off. The big clue came in the pullback to the moving average, right? That pullback to the moving average. You can see there weren't any buyers to be found, right? And then an easy clue is look at how easy it was to get away from that moving average, right? You'll notice that when a market does that, right, jumps up, can't hold the pullback to the moving average, look what usually happens. It reverses. So this is a very good example, not as dramatic as this example, but a very good example, right? A strong move up, but yet the buyers don't even try to hold the pullback. So just like this example back here, I'm looking at this market now as being more importantly a bear market from Friday, a short covering rally here on Monday. I'll tell you, if this would have really reversed, they would have bought that pullback and we'd be looking like the euro right now. Wait till you see the euro. The euro is a much better example of what a bull market looks like. This does not look like a bull market. It has potential to be a bull market, but again, when a market runs this hard, and again, it wasn't that hard of a run. It was kind of like a sleepwalking, right? It kind of felt like a zombie today as it was just kind of grinding higher. And combine that with the lack of any pullbacks, you might be wondering, why aren't we pulling back here today? It's because the buyers weren't buying it. It was the sellers who were buying it by getting out. Big clue comes the lack of any buyers on that pullback. An easy clue that sellers never really had control of this market, or buyers, right, never really had control of this market. The bears were just allowing this market to sleepwalk higher. Okay, it's also kind of interesting too, if you take this range from Friday, and you'll notice we pretty much ended right at the halfway point. So that leads me to believe this is kind of a range here, right? Lower highs, higher lows. Leads me to believe it's going to probably turn into a range here on gold tomorrow, right? The lack of follow through with the moving average, I'm expecting there to be sellers now waiting for this next pullback, right, going higher. And once we see a signal of failure above the moving average, we're looking to get short, right, to go back down to that big round number at 1200 here tomorrow. So what this oftentimes look like is this. You'll see this strong move higher. You'll see the pullback to the moving average, right? And the pullback will go too far, right? You won't see buyers here. It'll go too far, right? It'll move below the moving average too far. And once it moves too far, because you got to remember, a strong trend, it's not going to be able to get away from that moving average. It'll get stuck and then go, right? A strong trend will not be able to stay below that moving average very long. This is why I tell people you don't need a lot of indicators. You just need to use a couple indicators the right way. But this is what a bull market looks like, right? A bear market that really collapses off that moving average now, you know what's going to happen? When it pulls back to that moving average now, right, and those buyers try to look for that failure, right, that 2-try failure, because of this momentum going lower, That shows the cards of those buyers. And what happens is sellers are waiting to sell right here. Price will come up, right? It'll trap and it will dump back down again. That's what I'm looking for tomorrow, right? We've got that kind of sleepwalking market higher. We've got this evidence here that the buyers, I don't think, were really in control at all. I think the sellers literally gave them, right, the opportunity. So now I'm expecting you're going to see some sellers trying to sell that pullback, and I'm expecting to see some buyers now trying to buy into their failure, right? When they buy into their failure, now we've got those buyers exactly where we want them. We know where their stops are, and we can sell right into those stops. And a lot of times, right, as you saw back here, right, strong move up, we get too much momentum away from it, it goes up and then collapses right back down. So ultimately, there's your strong move higher, there's your big move off the moving average, expecting to see another attempt to go higher here, right, looking for that to be the sell, falling resistance right there, right? We'll trap high. That trap high will probably also lead into a trap, into a failure, into a potential pullback. Back down we go, right? A trap pattern into a buyer failure pattern, right? Into a pullback pattern as we go. This is by far the most advanced tactic because you're literally you're relying on the moving average to give you the market's context. I can easily see the bears had a big move down, this short covering rally. Now, if I can get this to go up, trap, and sell off, that's what I'm looking for tomorrow. How does it turn bullish, though? What would a bull move look like? You know, once they retest this high, if they retest this high, we're bullish again. Bottom line, right? If they retest that 097 high, we're back to being bulls again. Okay, and I'm wrong. Okay, and that's kind of the price you pay when you look right when you're a trader. In order to take one side of the market, you've got to not take right the other side. So basically, right now, I'm waiting to see do we go back and retest the high. If we retest the high, we're either going to see one of two scenarios. Either one is we pull back, and that becomes a range, and at that point, it's a bull range. So it's a two-try rule, right? Buy off the low. Or we go through the high, right? If it goes through that high, well, then a couple options. One option is it becomes a spike in channel. We look to buy the low of that spike in channel. Probably not going to happen, though, that wide channel. If we do retest the high, though, look for a smaller spike in channel, right? Look to buy off of that channel low. If we can get that buy, looking for that measured move target up around the 16.8. You've also got that, right, that big top from last Thursday's session up around that 12.18. All right, guys? So a little bit more advanced here on the gold. I know I'm beating a dead horse right now on this, but I know that trap high, failure, back down, or let's say it dumps, right? If it just dumps off that high, what do? Grab that, right? Grab that resistance, grab this resistance, sell, 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 right, off of that resistance level, going back down to that big round number. I think that big round number is a great, easy target for the bears, right? Will we collapse back down and go from there, or will we? What I hope for here is trap, failure, back down. We go from there, or do we go up, pull back, double top, trading range, one try, two try off that low, or do we go up, break through that top? Don't chase it. Find that new channel, buying off support levels, right? What will happen tomorrow? Well, just like you, I'm waiting to see what we get at 8 o'clock Eastern time tomorrow morning. Let's keep going. Let's wrap things up here now on the euro. And man, oh man, I'm taking up a lot of your valuable time tonight. Thank you so much for sticking around with me. The euro is bullish with a spike in range pattern tonight on this chart. The spike is bullish. That tells me that momentum is with the bulls, and I should be focused on buying at support levels tomorrow morning. The range, right, spike up is bullish, right? The range. Now look at how they're stuck around that moving average. See, that's what a bull market looks like, right? A bull market does this. When it pulls back below that moving average, it doesn't just chill out, right? It gets bought up like it's a bull market, and you're finally getting a pullback on it, right? That's what a bull market looks like. You go back to gold, and you can see why gold just does not look as excited, right, to be a bull market. You can see, right? If this bull market was really a bull market right now, it would have sat right there, right? It would have sat above that moving average. And again, I'm not saying it can't be a bull market. I'm just saying we're seeing a lot of clues out of gold that would suggest these bulls are not really as strong as they may have seemed at first glance today, right? The euro closes, we're way off that midline, right? We're stuck above the moving average. There is no sign at all right now the bears have anything going on in this. It's a bull, right? It's a bull momentum, right, in a bull range. The range tells me look for buying opportunities, 1 try, 2 try, back up. The range tells me if we want to go higher, I need to get that market up through that high, get that moving average up, and then buy that 2-legged pullback, right? We call that what? The fake out, breakout, pullback pattern. So it's pretty easy at this point. I've got a couple prior swings here, right? Find those swings, find those swings. And this whole area here could be your buy zone, really. That whole area could be your buy zone. But again, I take my range, I copy it and paste it down. Kind of creates a little buy zone right there for us, right? So 1 try, 2 try, right? And again, if it goes 1 try, 2 try, and runs, it becomes a bear market here now. We then look for that sell off of that, right off of that high. Targets are back down around that 17,000, right? So 1 try, 2 try, back up, fake out, breakout, pull back, get that moving average up, and we're good to go there. All right, guys. Also, don't forget, if this thing jumps, right, if this thing really runs hard, look for this as a new spike in channel, right? Buying the low of that channel. Just remember, anytime you see a strong momentum move, the odds of a pullback and a retest of those highs are really, really good. So if it just keeps going here, if it keeps going higher here, the dollar index may be having a problem with that right now, right? The dollar index may push the thing higher here. If it runs higher here, just find your new channel, find new support, buy that dip, buy the pullback, right? And again, how do we buy that pullback? If we go really running higher, we'll probably have to pull back below that moving average. 1 try, 2 try, seller failure into buyer pullbacks, right? And we're off of the races going higher, right? Seller failure, buyer pullbacks, off of the races there, right? Going higher. So that's the plan if we run, right? If we run. But again, when I say run, I'm talking this needs to be rip your face off type of aggressiveness going higher, right? This is not going to be a lazy, right, bull market like we saw earlier in today's session, right? So make sure you get that clarification. It's got to really pump higher. All right, guys. Now, I know I've covered a lot tonight. Don't forget, grab that free trading course in the upper right-hand corner. Right, grab the information icon in the upper right-hand corner. It's also linked up in the description of this YouTube video. You'll see hundreds of examples of these patterns. You'll learn a lot more about this strategy, and I'll even shoot you an invite. Come out and join me as a guest in our trade room so you can see how we do it every day with all of our clients. Now, don't forget, I got a toll-free number right on the homepage of the website. If you have any questions, pick up the phone and give me a call anytime, morning, noon, or night. Learn more about our beginner, intermediate, and advanced classes. We got a great free trial on the homepage of the website. And as always, right, I got live support here if you have any questions along the way. Once again, my heart goes out. My prayers are with everybody affected by this hurricane right now. Hope you guys can push through this. Stay positive, right? We're right there with you, keeping you guys in our thoughts. In the meantime, we'll see you guys back here same time tomorrow morning, 8 o'clock Eastern time with all of our advanced members in our trade room. If not tomorrow morning, come back and see me again tomorrow night, and we'll do it all again for the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.